All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy Friday, and hopefully it's a good Friday to end what has been a relatively strong trading week here so far, right? Markets have been sort of grinding up on pretty low volume for the majority of the week. And we'll see if that narrative continues to kind of shape up and kind of continue to push markets. We're kind of still in that like headline risk environment where who knows what Trump is going to say, do, or how things are going to move. Like yesterday, if we look at yesterday's close, like that's a freaking crazy candle to finish off the day, right, on both ES and NQ. And so I'm very curious to see, if we get more of that type of price action, right? In general, in these like low volume environments, that is sort of what you're most afraid of, right? You're most afraid that price action is going to get a little bit sticky, or that a really big buyer basically is going to just step in and flush through all the levels hunting for liquidity. And so we'll see, right, if any of those scenarios come together. But in general, right, those would be your two largest fears when you get kind of to the start of a low volume day. With that being said, right, shouldn't be very challenging for us to reestablish a momentum standard that is greater than what we've seen here so far this week. Maybe, bar Tuesday, but we'll see if we can get a consistent story to show up here, and hopefully, right, we can kind of go from there. In general, right, this week we've had a little bit of a calmer trading session at least the last 2 days. There we go. And I think a lot of that is just by being a little bit more technically focused, right, on just being a little bit louder, right, and more specific over what my trading plan is. And I think that's just slowing me down and keeping me from losing too much mental capital. Both of the last 2 days, right, started off with a win, going 2 for 3, and hopefully we can continue building up, basically more of those types of trades and those types of starts to a day, like we talked about there for a while. But it seemed like we were destined for the New Year's resolution for 2025 to be start every day with a red trade. And luckily we were able to invalidate that pseudo curse. So let's see if that ends up actually playing out here. So with that being said, not too much else for me to rant and rave about here today. Final thing, markets are open on Monday, but I am taking the day off. I got a little travel day planned, so apologies if things take a little bit longer to kick back up here for the week. But we'll hopefully get ourselves, ripping and roaring here, and not have to worry about Monday too much. So, let's start mapping things out here. Let's figure out what we want to do here this AM, and then let's go from there. So we got PMI this morning, right, 945, and then existing home sales and consumer sentiment. That's relatively reasonable. And then today again, right, PMI, red folder, and then a little bit. So I'm expecting probably a slightly slower start here, right, to today's market session. So let's make sure, right, that it's all good and in good shape. So first things first, team, what's the count here on ES? Let's start there. And let's get after it. Yeah, 1 out of 3, Eric, spot on, right? So green candle, decreasing volume, and then red pre-market. So again, 1 for 3 here to the upside. No real strong indication. We're going to have to change our plan here too aggressively. We're going to be targeting 160 kind of as our starting point here to the upside, and then maybe go up towards like 62. So then we'll go 61.80. And then 6,200. And then to the downside here, right, targeting pre-market lows. So that's 140. and then down towards that 100 barrier. If we're going to be bearish, what kind of volume would we like to see here this morning? Any ideas? Yeah, we want it increasing, and we want it increasing relative to yesterday, right? So we ideally, if we're going to get some indication of like a personality shift here in the market, right? We want it to be maybe bigger than even Wednesday's volume, right? Increasing relative to yesterday, but increasing relative to Wednesday would be even better. Basically, if we're going to say that it's no longer a low vol grind higher, we'd probably want to see larger volume than what we've seen on the low vol grind, right? And then the general theme, right, that we've kind of seen here so far this week is a lot of kind of like shake and fake type price action, right, where it wants to give you a little bit of a fake out in one direction before making a move in the other. Kind of just a consequence, right, of low volume markets where you're expecting, right, for liquidity to be hanging out at multiple prices instead of at a singular one. I mean, that's a generalization, but that's generally what creates that sort of fake out scenario, right? Where they hunt liquidity, and because the volume isn't particularly strong across the board, they've got to search through deeper zones, right, to be able to get the sizing that they want. So that's generally how it works. But that's a bit of a rant. And yeah, besides that, ES looks pretty good. So let's see if we can get ourselves some nice, strong trending PA here this AM. At least in either direction, and then go from there. Okay, NQ. What's so similar about it? What about NQ maybe is a little bit different? Yeah, happy Friday to you too, Brandon. So I wouldn't say that either of those things are what's sticking out to me, right? Yesterday is an inside bar, right? So yesterday, much more of a formal day of consolidation relative to the breakout day, right? You saw there on ES, right? So yesterday, more of a trend looking bar on one index, right? More of consolidation here on the other. And that definitely gives us a little bit of a difference from a personality perspective, right? Where maybe this is telling me that the pop, right, post consolidation could be a little bit bigger. Whereas on ES, right, maybe you're trying to think about like volume divergence reversals, or that this is running out of steam. So this would be a stronger indication, right, of a possible trend continuation. Whereas ES probably a slightly stronger conviction of it being able to give you price action in either direction. Does that make sense? Discord, we're slow here this morning. What's going on? All right. So then to the upside, right? We're looking for pretty much same levels as yesterday, 21.1 and then beyond, right? Day of formal consolidation. Not really much is changing, right? So we'll keep it as is. Sorry, 22.4. Whoops. And then here to the downside, right? Targeting, you can go 21.9, right? First. And then 21.8. And then the same levels as we had there yesterday. So again, not too much is going to be changing from this perspective, albeit maybe I have a slightly more bullish bias on NQ than what I would have on ES. All right, CL. What's the count? How do we feel? What's been the general theme we've had on crude oil here in the last couple weeks? Or not last couple days, we'll say. Jumping ahead here. Yeah, definitely a bit more of a bearish kind of path, right? We've seen more days of, say, increasing bearish volume, right? Good indication of the kind of that trending momentum here, or that post kind of sell-off environment, right, in the last few days. So we're certainly looking for more of a continuation of that story versus anything else here, particularly aggressive to the upside, right? So we're looking for 2 out of 3 here to the downside, right? You're spot on there, Eric. And that's with volume. And we're looking for bearish continuation today. So 2 ways we can play that, right? We can look for a breakdown here under current low of day. It's approximately $74, right? For a move down towards, say, 73.50, 73. The same levels we've basically had here mapped out all week. We could fill those in. 72.50, 72. Cool. And then to the upside, right? We don't really have an upside narrative because we've seen price action reject inside yesterday's candle, Tuesday's candle, right? And then last week's Thursday's Friday certainly gave us another good, strong narrative, right, of that selling pressure. So inside the recent price action that we've been dealing with, we have no evidence that bulls have reclaimed control. So it's very, let's say, like front running, right, to assume that that would be the case. So if I can't make the assumption that bulls are the likely ones, right, to step in and defend that area, the next logical conclusion, right, is to look for rejections where you've seen bearish rejections happen before, or where you've seen bears, right, defend those stories. So that's why we started off asking what the recent daily trend is, right? The recent daily trend is downside bearish price action with strong volume. And so we're looking for that same narrative until we get a proven otherwise. So a high volume rejection, right? Basically anywhere inside this box will make it red, right? Wouldn't be unexpected. And so we'd be looking for a bearish rejection also inside that zone. Make sense? Yeah. All right, perfect. Sorry. Coffee went down the wrong pipe. All right. Apple, what's the count here? How do we feel? Red candle, decreasing volume, right? Gap up. Sorry, that coffee's doing me a damage here. All right, 1 for 3 here, right, to the downside. And we kind of got that bottom up gap fill to a certain extent. Still got a little bit left there, so we'll be looking for a 227 breakout here to the upside. And then to the downside, right, it'd be under yesterday's low, so that'd be 222.65. So we'll call 222.50. And then in general, right, this story is telling us consolidation more than trending price action, right? Only one of those narratives in yesterday's candle shape is telling us that we have that momentum in either direction, right? And that's the candle color. Besides that, right, the shape is kind of crappy. The gap up is opposite, right, of what that color is. And then the volume isn't giving us that increasing standard. So not really a ton of momentum, not quite consolidation, but maybe this could give us that breakout and see some enthusiasm show back up, right? And we can get a nice amount of follow through. I talked about this a little bit yesterday over why Apple bouncing off of the 200 MA is different versus Microsoft bouncing off of the 200 MA. And really that's the main story, right? Is Apple hasn't been showing us like a leader effect, right? It's kind of been more of a lagger than a leader here recently. And it's not showing us that like immediate strong reaction, right? Like a Microsoft did. And that's not necessarily unexpected. So Microsoft, right, on that bounce, big separation pretty much immediately on a move under. Whereas Apple, right, on this EMA touch, it's kind of just like holding it, hanging out. And so it might just be a little bit of a slower, longer move, which is why I have less interest in it. Okay, Tesla, not quite an inside bar, but we continue to consolidate inside Tuesday's range. So Tuesday range consolidation, first note, right? And then the count here, red candle, decreasing volume, gap up, still opening up, right, in the implied middle of yesterday's range. Maybe not, or on Tuesday's range, sorry, right? So maybe not a super easy move for us to get trending price action here, right? So let's make sure that we get strong separation in either direction before we do anything too crazy. So from my perspective, right, I'd still like to see a breakout above that rejection zone or a breakdown here under that Tuesday low. And I don't see any reason for me to change my plan in the short term. Okay, Microsoft inside bar. So this looks a little bit more like the NQ than it does ES, right? I would say Apple probably looks a bit more like ES, whereas, right, because it's got that, you know, higher high, higher low. And then NQ, right, looks more like Microsoft because of that consolidation inside bar candle. And you're still looking for that, say, 447 breakout, and then, you know, maybe a gap fill under like 36. All right, cool. Amazon. So looks like it's a higher high, higher low, decreasing volume, gap down. So it's a 1 out of 3 here. And you're looking still for that, we'll call it, I can get that mouse to work, call it 235.50 breakout this morning. And that doesn't give me a particularly easy bounce narrative, right? Because we're not seeing that bounce zone be defended by volume yesterday. And then to the downside, you're looking for a breakdown under 231. And then go from there. Okay, AMD. Green candle, decreasing volume, gap up. So 2 out of 3 here to the upside without volume. So we want to probably see either like this is a textbook Bollinger Band reversal scenario, right? Weak gap up into a point where you've seen a pseudo rejection, low volume, and then the gap up doesn't really match the volume profile. Textbook Bollinger Band reversal type setup. And then, like I said, we're looking for maybe a breakout above that rejection zone, right? It's either like a gap fill and go, so see bears fail. Or a breakout here over 126. So that'd be very, very interesting. Okay, NVIDIA, inside bar, big gap up. Look, if NVIDIA is going to give us a nice amount of momentum, or it's going to be like a leading name here today, we know how psycho mode that can make the indexes, especially NQ. And can be very curious to see if this momentum continues. If it does, and it wants to become, head market honcho, then we're going to have to put more consideration probably to NQ versus ES, right? And it's not because, well, it's twofold, right? It's because the market weighting for NQ is going to be higher. Sorry, market weighting for NVIDIA is going to be higher in NQ than it is going to be in ES. And it's also because we're getting a more, say, complementary pattern, right, on both of these names. So NVIDIA is giving me that inside bar breakout. ES, right, we're also looking for that inside bar breakout. So if NVIDIA is acting like a leader towards our tech-heavy indexes, then it's logical for it to be behaving one step ahead, right? And we're looking to play catch-up to get back up to that step, especially if it's showing us that continuation move here this morning. So then that could act as a very powerful kind of magnet for price action here today, and that would be worth keeping an eye on. So if I'm looking at like how I'm setting up my screens, NVIDIA is going to be a name that I have on watch, or I'm going to be pretty consistently kind of keeping an eye out on, right? So I've talked about before my setup. I have my chart on my left, right, with what you guys see. I've got my charts to the top right, which are either like ES, NQ, or a leading name at a various time frame. and then I have like Discord, YouTube chat, and then my execution windows. So inside my setup screen here today, right, I'm going to have NVIDIA in that place. NVIDIA plus probably ES while I focus on probably primarily NQ. So just keeping an eye on what I've identified to be that leading name should just give me a little bit of an extra like confirmation signal to make sure that price action is behaving consistently here this morning. Okay, Meta, green candle, decreasing volume, gap down. So again, 1 for 3 here. Strong 1 for 3, right? Looks more like ES than it does NQ. Morning SG. And so we're going to look for a 637 breakout here this morning. And then still, look, I don't want to be very aggressive in like chasing a rejection here. So I'd have to probably still get back into that wedge before I'm really interested in anything to the downside. Nice. We'll take a look at some of those in a sec here, Oz, but that's fantastic. Congratulations. All right, Netflix, a little inside bar. Post-earnings inside bar, right? Makes a ton of sense. And so you're looking for a breakout above the earnings range. Man, I'm so impressed with Netflix. Every time, I don't think it can keep going any higher. They can't raise any more prices. They can't find any more subscribers. They somehow do. It's impressive. All right. Google. Probably the grossest, right, of all the charts that we've looked at here so far today. Doji. Increasing volume, opening up in the pretty much exact middle of yesterday's range. Like that is the middle finger of price action, right? Or yeah, I mean, that's probably the only way of describing it. So high volume indecision, generally the worst decision. That's one of my favorite sayings. So we'd like to see really just a breakout in either direction above yesterday's fake out zones. So yeah, okay. We're going to call it 2 out of 3 here, week 2 out of 3 with volume. And then, yeah, breakout above 201, breakdown here under 195. And I would stay away from this really, as much as I could. Okay, and then VIX 14.95. So if we're going to see kind of like that low vol grind higher, what would we expect from VIX? And if we're going to get a big flush here to the downside and like a rug pull day, what would we expect? Any ideas, team? Any ideas? Anyone? Am I talking to a wall? What would happen if, what would we expect to happen if the VIX goes into 13? What would we expect to happen if the VIX goes to 16? Yeah, stocks go up generally, right? But we would expect it to be a low vol grind, right? So if volatility disappears, you'd expect volume to also continue to dry up and for basically to continue to give us, right, like these higher highs on decreasing volume with full body bullish candles, right? If we're going to get a big 16 or 17 or 20 handle, right, all of a sudden here today, probably means that we've seen a pretty bad like PMI, right? Or really bad 10 a.m. data, and then massive volume and gigantic ranges here all of a sudden showing up. So if we're going to be bullish, right, we probably want to see VIX decreasing. If we're going to be bearish, right, we want to see it increasing. So that's how we'd expect it to behave, right? And we want to, again, keep that tool in our arsenal here and not be surprised if price action behaves one way or the other. So, okay, 9:27 here, few minutes till market open. So I'm just going to go spend a minute or two here visualizing a successful trading day. And then I'll jump back on here in a few minutes and set ourselves up for what should hopefully be a strong session. So let's finish off the week with a bang here, team. Looking forward to trading with you all. And let's get after it here in a minute or two. All right, so let's get ready here, team. Let's set ourselves up, right? Let's see what the markets are going to give us here today. Not a huge volume standard here yet. If I'm looking at it, 23 versus, well, it's going to be close. So it's now just a little bit bigger than what we saw yesterday. So let's see. But again, right? Priority number one here today, twofold. One, don't do anything that makes me regret, right, my trading week or ruins my weekend here on a Friday. Point number two, right? It's been a good trading week here, right? Green every day so far. So no reason, right, to feel like I'm owed price action or I need to do something or that I need to gamble with profits or that I can afford to lose here today. None of those types of thoughts or feelings or emotions. And then really priority number three, right? Focus on cutting my losers as aggressively as I can, right? So the first moment that they are invalidated, look to add to winners like a lunatic, right? And then focus on closing my positions as my P&L is increasing instead of on pullbacks and getting stopped out, right, on smaller wins that are required. What I'm looking to do here constantly, right, with those sort of three priorities is to really focus on increasing my margin for error and increasing the probability I have of being green. What inevitably happens, right, is if you get really good at closing your trades, protecting your entry price with your stop loss, right? So say we go up to entry price here at 22.50, right? Stop loss at 22, say 25, right? Just keep the math simple. And then you get it up to 22.100, right? You're up 50 points. If you then get stopped out protecting at 35 instead of closing it at 89, right? You need to now win on 80% of your trades to be green instead of needing to win on 35% of your trades, right, to be green. So we want to make sure that we're flipping those ratios and really focusing on improving the size of our average win, right? So the thing that I see most often in my one-on-ones, I would say, right, is that too many people are greedy and holding out for bigger wins and thinking this is going to go to be a $2,000 win or a $5,000 win or a $1,500 win. And they go from being up $300, $400, $500, $800 to then either losing money on that trade or only making like $100 because they're closing as their P&L is decreasing in like a panicked state. So you need to flip those ratios, right? Even if it's closer to 1-to-1, you can then start to make other improvements that will flip that bias back in your direction. But we need to really be focusing on making it easy for ourselves to be winners. And the only way that that's going to happen, right, is if you have that margin for error. If you're closing your trades, right, when your P&L is at all-time highs, and just learning, right, that it takes a level of tolerance to build up that ability to do so. So instead of expecting yourself to be perfect on your entry and perfect on your take profit on each and every single trade, get good at taking it off, right? The first moment you feel like you have anxiety, stretch it for that next second, right? Or the first time you feel like you're going to be greedy, take it off right at that point. And then if the trade is strong, you can always look to re-enter and play that idea again. But this concept, right, that you're going to make go from 0 to hero, right, on one decision, and that's going to be the thing that bails you out. You don't have the evidence, right, to show that that actually is a reliable way to make money. And you got to focus, right, on making that margin of error, building up that tolerance, right, building up that conviction, and training your gut over what is strong and what isn't. So that I want everyone to focus on here, right? That is the thing that I think most people are lacking at the moment. And this is where you should be using the journal, right? In sort of using these tabs, right? So did I close my trade too early? Yes. Why not, right? Or no, right? Why not? And build yourself that evidence, right, to hold out for bigger moves. But most people are holding out hope for this monster and then getting stopped out when they should be up 300, 400, 500 bucks, and they're getting stopped out at $100 up, $100 down, right? Kind of in that range. And they make their average win to be, 3 times smaller than their average loss. And we need to flip those ratios. And the only way to flip that, right, is to close your trades as your P&L is increasing, get back on the positive side, and then you can optimize for better entries or better take profits. But we have to make sure that first step is accomplished first before we can optimize, right, for a better outcome. Sorry, a bit of a ranty and ravey morning here today. Apologies. Okay, so far, no price action, right? That's very appealing. It's all just low volume breakdowns or low volume moves, which, right, truth be told, is what we've expected to have seen here so far today. Maybe we're starting to set up for some possible fake out scenarios. We don't have a setup here yet on NQ, but potentially here on ES. You have your first fake out here above the opening range. So weak open, right? Okay, nothing really interesting. Fake out above the opening range. You'd like to see fake out number 2 occur, which would be a failed breakout, right, above that yellow line. So see price action climb up and then pull back under that yellow line. 2 reasons why I'll probably still avoid this trade. Not enough of evidence, right, of like a theme of the day. We're 10 minutes in. And then we know that in 5 minutes, right, we've got PMI kind of setting up here, and we've already seen that that's a red folder event. So certainly something that we'd expect a relatively volatile reaction to. And then we compare those things together, right? Contextually, it kind of tells us the market is waiting for that event, right? Where we've got kind of doji, non-volume, non-appealing, high conviction candles going into a event where you'd expect there to be a strong opinion, right, over what that means for markets. And so we're going to wait for that opinion to get determined, I think, here. At least I'm personally going to wait for that to be determined before I do anything very, very crazy. Does that make sense? My catchphrase this week. Awesome. Guys on Discord, is everything working okay here today? Just feels really slow in the chat. All right. Anyone got big plans here this weekend? If there's issues Apex side or prop firm side, I can't really help with that. There's nothing I can do that will make that or solve that problem for you, CB. Let's go, Sammy. Ah, boy. Nice, Kyle. Enjoy paintball. Hey, where are you going skiing, Prax? Are you going to the championship game, John? I'm going to the Eagles Commanders. Let's go Whistler this time of year. Beautiful. Nice, Alfred. That's awesome. Hopefully it's busy after all the chaos last few weeks for you guys. Okay, so data dropping here in just a minute. Yeah, this could be setting up as another possible fake out idea here. Right, that algo flush fake out's a great possible scenario. But that would be easier on ES than it would be on NQ, right? So let's see how this candle closes. Can't close really above that yellow line. Ideally, it closes back inside the opening range. NQ, no go here yet. And then again, we do have some data dropping at 10 a.m. as well. But hopefully with PMI, we get a clear window here for a few minutes. Okay. Ooh, look at that. PMI, here we go. So now we're just going to wait, right? We knew kind of that was coming. That was a pretty gigantic move. Nice, Jay. Well, keep it simple, right? If you have any questions, there should be a few videos inside the Discord that kind of break down how I use TradingView. Even if you like live trade examples. I don't know about what like, how would you define usually, Steven? So it's kind of a tough, it's a tough question to answer because fake outs happen. Fake outs will happen every single day, and they're going to give you opportunities. They're going to give you possible looks every single day. I would just say that generally you see more fake outs in low volume environments than you do high volume environments. At least the ones that I'm talking about trading. So I would say that it's more of an emphasis in those situations than it is when you have like strong trending markets. So you get fake outs daily. The fake outs that I'm interested in possibly trading are like the fake out technique, happen more or are more reliable, we'll call it. A bit of an oxymoron. But they're more reliable in low volume environments. and you see less of them in high volume environments. So like here, right, we've had 3 fake outs so far, but none of them have been particularly tradable yet. Okay, that one wasn't a fake out, right, on ES because it closed above the previous candle's high. So now maybe the move here would be on NQ. Right, if bulls were strong, why couldn't they hold above, right, that 2053 type area? So it could be interesting here. Okay, and so we'd expect it to blast through and then back below. So it hasn't really blasted, I would say. So we want to see this fail, right? And it's not really giving us that. Oh, that's better. Okay, so stop loss now would be 70.50. Okay, so let's start mapping this out here potentially. So stop at 72. Okay, guys, so I am in short 64.25, one contract. So far, so good here. So far, so good. Oh, come on. So far, so very good. So let's see if this thing can keep breaking down here, make a lower low. A failed breakout here under this low would make me very nervous. So let's see if it can flush and dump pretty much. Otherwise, I'm going to look to get out and take the small win and reset. Still no fake out lower, but I don't want to see it pulling back towards my entry price. If it's going to break down, it should break down aggressively. And I shouldn't have to chase it. Okay, it's got to die here. Hate the consolidation. So it's got to flush. But it still hasn't made a lower low, so I can't invalidate my idea here quite yet, besides a, feeling. I don't know if that's enough to react on, right? I haven't seen anything that invalidates my bear case too aggressively. Okay, so I am out of this for a $115 loss. So maybe just a little bit early on that entry timing. But I think it was the right thesis. So just a little bit maybe unlucky. So the time here, 54. Again, that's another fake out here. So now stop would have to be 79. Well, that's a big move higher and then a big pullback lower. So I would say that that probably wouldn't be how you'd expect strong bulls to react, right? You would have expected them to make a higher high and sustain, not necessarily get stuffed. Okay, so we can get stuffed here. All right, so I am back in here, guys, at 22.070.25 with 2 contracts. Stop loss at 79. And this is much better here. So far, so good, right? And this immediately puts me back to green on the day. So protecting this, right? Not going to let this go red on me if it does. I'm not going to deal with the deja vu. Again, still hasn't made that lower low. So let's see if it can break. Come on, come on. If I'm asking myself, is this behaving the way that I want? I'd say probably no. It's got to keep moving here. It's got to keep moving. Okay, much better, much better. Now it's got a flush. Get under that 50. And then we're in business. So again, good example here today, right? Of, hey, if you take a shot and the trade fakes you out and then makes the move that you're looking for, you can always jump back in at a better price. And that's exactly what has happened here. Took a small loss, $115. Now up $1,000 on this trade. So sometimes you're going to be just a little bit wrong. And you can reset, right? Try again. And boom, make your day, right? So beautiful rip here so far. Got coffee in hand. Finger on the button. So keep watching here, right? Now that we've made a breakdown here under our fake out low, we don't really want to see bulls be able to recover above that price, right? We want to see that act as resistance, right? And keep pushing us here lower, right? Resistance for a bullish bounce, support for a bearish breakdown. Sounds good, Oz. Congratulations. So things got to get down under 50 again here. Otherwise, I need to get out of this. Come on. Ah, it's finding support. Come on, come on, come on. Market data here in a second. I don't know if I want to gamble, hold through it. It seems a little bit suspicious. So we're going to get a little dump here. Okay, I'm out. Just before the data, right? Just before the data. Closed at 55. Closed at 55. Good decision. And so that was for 560 bucks. Not bad. So we could try potentially, right, another scenario here, but so far so good. So far so good. And you guys understand why I closed prior to market data, right? Everyone understands that. All right, who made money on that? Hopefully everyone. Let's go, team. Let's go. Good job. Steven, how'd you lose on that? What was your entry price? And why didn't you close the trade? So what was your entry price? Well, it should have been pretty close to impossible to have lost money on that play because we were green right away. So what was your entry price, Steven? You got to answer that first question. All right, whatever. Yeah, but I'm asking for a specific, man. What was the price? I'm not going to ask again, right? I'm asking for a specific number, not a feeling, not a think. I'm looking for facts. Okay, so we possibly have another scenario here setting up to the downside. So stop would have to be 41. So let's watch here. So I'm watching, right, for the reaction here at this yellow line. Right, if that can act as support here to the downside, that then becomes my entry trigger. So my price that I'm looking at, right, is 32.25 or better. So let's see if this thing can give me a gentle pullback into that price. Okay, if I don't get a look here on the 3, I can always jump in here on the 5. Okay, so watching carefully here. Okay, so now we're going to be looking here at the 5-min on NQ. Steven, did you find that entry price, man? If you don't know what price you're entering a trade, you should not be taking it. It's like it shouldn't be this difficult to find, to be honest with you. So we're back in possible business here. Still looking at that 3250, right? That's still my zone. So now it's got to act as resistance, right? Hasn't happened yet. Right? It's like that yellow line wasn't there, right? It was nothing. It wasn't even a speed bump. So it's telling me, right, it's probably not ready for my entry timing. Okay, now back under. We want to see it reject at or just above. It's not really doing that, right? It's kind of absorbing around there a little bit better. Okay, much better. So what'd you trade, Steven? So if you think you're taking the same trade as me, but you're not trading NQ, then we didn't take the same trade, right? So I'm very confused by what you're doing, man. Yeah, but I've only traded NQ so far, Steven, right? I haven't traded ES. So yeah, dude, if you don't know what you're executing, I don't know what to say, right? I really don't know what to say. Okay, so I'm still watching for an entry here. Okay, again, not really respecting the my Maginot line yet. Better. Okay, there's a little inside bar fake out potentially. Okay, guys, I am in average price 132.50. A little bit of a crappy entry, maybe. I got two contracts here. Stop at 30. Let's call it 40. Okay, so far so good here again, right? So let's see if this thing can flush. Big breakdown here under 222 would be nice. But so far so good, right? That's a quick 800 bucks. So let's see if it can flush, right? Want to see it get under low of day. And again, the deja vu we're trying to avoid is for it to make these little fake breakdowns and then pull back. Making it very hard to hold on for wins. That looks like a fake out, right? It's got to die here. I think I have to get out. Okay, still in, still in. But I don't like that feeling. That wasn't great. I think, ooh, I gotta look for a close, I think. Next little big pop lower, I'm gonna try to get out. I don't like that fake out. I think I have to get out. All right, just talk myself out of it. So I closed at 27, all out at 27. And maybe a little bit prematurely, but that's okay. If it doesn't want to behave the way that I expect, I'm admitting I need to get lucky, right, for it to keep making me money. So again, right, 2 for 3 day here to start the session off. Cannot complain. All right. Hey, no complaints here. It was a $100 loss. If I take $100 on every first trade, I will gladly pay that level of tuition. Again, I don't think I've missed the majority of the move. Maybe I didn't maximize it. Like, you know, I went up from being up 800 bucks on that trade to being up 200, like 211. So I probably should have made, again, right, maybe close that trade just a little bit earlier. You turn that from being a $700 day right into a $1,300 day per account. It's a pretty big difference. Held under, so maybe I can look at ES here. Yeah, we need to see previous low of day acting as support. That isn't happening at the moment. Okay, so watching NQ. So if we're looking at NQ, right, what do we need to see it hold under here for us to be confident we have a setup trigger? Yeah, we want it to break down under the round number, right? And under low of day, which is approximately the same thing, right? So a little fake out under that price doesn't really tell us strong bears. Maybe that tells us that reversal setup, right? Which is basically the opposite of the move that we played from these fake outs here, right? So now it's a little fake out under the low of day. Maybe we're back in business, right, for that like little mean reversion bullshit trade. I don't know why I cursed there. That was so unnecessary. So I wouldn't say that that's really a fake out candle. And I probably made a few like little take profit mistakes here today, but I think my entry timing has been pretty good, and my stop losses have been correct so far. So 2 for 3 to start. I won't complain. All NQ short, interestingly enough. Hey, awesome. Glad to hear it. Yeah, we'll keep firing away here if good opportunities set up. Right now it's slowing down a little bit. I don't really have any setup triggers that I can trade. All right, that's on decreasing volume, so I can't trust it. That doesn't make lower lows. And can't really sustain. Love to hear that. That's great feedback. And yeah, look, you get better through repetition, and just starting to learn kind of how I behave too, right? I'm a grumpy, moody prick at the best of times, so learning how to navigate that's pretty important. No, I'm just self-deprecating. Okay, so here's now that possible second fake out on NQ. Right, so fake out 1, fake out 2. We need to hold, right, or see that previous low of day act as support. Right, so far, no. But an 87 stop would be very, very interesting. So this would be to the long side, right? This would be long. Please, guys, make sure you have your order window set up correctly here. Yeah, fire away, man. Fire away. Don't ask to ask questions. Just ask your question. Right? If I can't answer it, I won't answer it in the moment. I'll focus on something else. But yeah, don't ask for permission to ask questions. That's what you guys are paying for. Still not seeing that yellow line act as support, right? So no reason to jump in here yet. We're not really getting any separation away, right? So again, I'm being a little bit patient here. Because I keep see it get like pseudo stuffed again at that 22,000. So above 22K, right, I'm looking at one contract. On an entry below, I'm looking at two. Well, I don't take too many days off. So usually I try to work it around any plans. But no, there's no other trader that I work with. I basically just tend to work until I'm burnt out and then take a bit of a break, a long weekend, a couple extra days, and then get back to it. There's not really much else I prefer doing in this world. Okay, so now I'm looking for a gentle pullback here. One contract. Under now has to be under 09, right? So I'm going to wait it out. So let this candle close. If I can get like an overreaction flush to the downside, right? Prior to it breaking out, hopefully. And it's got to be under green line, ideally yellow line. Okay, watching. Sweet. So I am in average price 99.97 on the dot. Two contracts. Stop at 87. So green equals long, right? Green equals long. Let's see if this thing can run. Otherwise, it might just be a scalping day here. So we can get back up and over. I haven't understood the plan on that trade, correct? Okay, good. Again, I don't like the separation. Okay, it's got to go here. Otherwise, I got to get out before it pulls back to entry price again. Got to go here. Okay, it's not behaving the way that I want. Guys, I am out. I am out of this trade. It is not behaving the way that I want. This is my position, right? When I write out my position here on my screen, in NQ long at this is my price. Here's how many contracts I have. Here's my stop loss. No, green just means long. Right? So I'm color coding it. Green is long, red is short. White line is profit target. Okay, so again, right, little small win, not behaving the way that I expect. So cut it, right? Take the small win, move on, try again. 3 for 4. Just high a day. But okay, right? Good decision. Get out, right? Try again. All right, so if it doesn't behave the way that you'd expect, no ego, right? Just get out of the trade, reset, get impartial, try again, right? Just because I made a decision doesn't mean I need to assume that I'm going to be correct on that right away, right? Or that I'm infallible and I'm never going to make a mistake. I'm basically assuming that I'm like really dumb, and I'm trying to make it easy for my dumb self not to lose money. So if it doesn't feel the way this or doesn't behave the way the smooth-brained ape thinks it's going to behave, then I have to get out and try again, right? Worst case scenario, like we played on this breakdown, you can try again at a different price or at a different level of maturity in the trade. But thinking that, hey, I would have held on, I would have not gotten stopped out when it moved 10 points lower, right, under what my stop loss price needed to have been, I'm an idiot. I'm lying to myself, right, if I think that that's the case. So I can't do that, right? I have to be transparent, understand that, hey, if I follow my rules, I can just reset, try again. And, okay, there's going to be times where my thesis is correct, but my timing is wrong. If I feel like my timing is wrong, let's get out, try again, right? If I feel like my thesis is incorrect, okay, let's get out, try again, right? If I think my position sizing is wrong, okay, let's get out, let's try again. The default reaction to getting a level of information that you don't expect is to get out and try again, right? To get impartial, look at the market cleanly, and then try again, right? But it's not an element of control, right? It's just as easy to close a trade for a small win as it is to close it with the hopium of getting a big win. It's the exact same thing, right? You're just clicking sell, you're just clicking X, you're just clicking whatever. So if you tell yourself it's really difficult to accept everything but a small win, then of course, you're setting yourself up for failure, right? So it's the language you use to describe your problems that makes it hard. And the reason why we're able to close those trades early is because we're defining what we want strength to look like, right? If I'm playing fake out long and then it separates away from my entry price, looks really, really good, and then it pulls back under my entry price, do I see any evidence that that price is behaving in a strong way? If you make a higher high, you'd expect it to continue making higher highs, right? So, okay, now it's giving me characteristics that would indicate indecision or bearishness. So if I'm getting that tip and I'm saying, hey, let me ignore this and hold out for a longer move anyway, I'm being an asshole, right? Like, I'm telling myself I need to be lucky, not I don't need to follow my system, right? So I'm giving away my element of control by choosing to not act on that. And then you get stressed out because you didn't make the decision when you should have made the decision, and now things are going against you, and you've given up that element of control because you've given the market that power, right, to dictate your outcome instead of being the one who knocks. Right? So you get stressed out, you drain mental capital, you give up control here as a trader from when you go trading your system to trading your P&L and needing that outcome to satisfy your decision, right? So instead of taking a $40 win, you would have taken a $500 loss, and now you're fucked, right? Like, you're making it harder for yourself to win. And instead of being up $700 on the day, now you're down $1,300. All because you can't control your greed, right? Because you're not being specific enough to fight back against those elements. Because you can't make and follow a plan. So you're just being an asshole. You're just self-sabotaging yourself, right? This pursuit of bigger gains or bigger wins is just costing you making any real money. So why behave that way, right? I don't need validation for my short-term decisions. I'm not 7 years old, right? I can delay my gratification. Right? So instead of needing to be correct on a single decision, if I behave this way, I increase my probabilities of being green on the day, right? If when I take a loss, it's $100 instead of $500, I need to make 5 points to be green. And NQ will move 5 points in 3 seconds, right? Maybe even that slow. So I make it easier for myself, right, to literally just delay my gratification to the end of the day, 11 o'clock, right, instead of needing to be satisfied with how I behave in the next 3 minutes. Like, I feel sorry for your girlfriend, right, if that's what you think delaying gratification is. So we have to be able to push that on, right, and think a little bit longer than needing that immediate satisfaction. Because judging ourselves based off of that is a horrible way to make a living. Right? You're never going to feel good. Right? And we're not even asking to like delay the gratification by years or months. It's literally to 11 a.m., end of day, end of week. Like, how short-sighted do you have to continue being to not want to play this game in a way that you're optimizing for that outcome? Right? Like, that is not far away. Right? And even just delaying it enough. Okay, if I do what's best for me for end of day, and you could just think that way, holy fuck, how much easier would your life be? Yeah, but I think for most people, Steven, it is, right? trading is not a game where it's me versus you, or me versus Jared, or me versus Kyle, or me versus Oz, or Steven, or anyone, right? It's me versus me. And it's about not allowing myself to make this harder on myself by feeling or like creating external amounts of pressure and just saying, ooh, this next trade I gotta be green on, or this next trade I need this or I need that. Right? So it's we put so much more pressure on ourselves when we think in P&L perspectives instead of when we think in process perspectives, right? It's like we've all done this, right? Where you've paper traded and you've felt so much more calm, right? Like you can see your setups, you can see things come together, you can see price action behave in the way that you'd expect, right? You're able to hold out for winners, you're able to pyramid into trades, you're able to do all those things simply because when you're paper trading, right, you're not putting any financial pressure on yourself. There is no financial benefit to you doing that, right? So you naturally focus on your process because that's the only way for it to be entertaining or for it to be valuable. And then the second you go back to trading live, you ignore those things, right? Because now you go back to trading your P&L. So the focus, right, is thinking, obey, if I'm really successful doing it this way, and that occurs because I am so process focused when that is the case, I've got no reason but to follow my rules. How can you set up so that your live trading is most similar to that? What are you talking about here, Oz? 192 to 204. Right? So your decision as a trader is, okay, if I know that I'm going to put this pressure on myself, how can I gamify the other elements of trading so that I reduce or remove that pressure? Right? You're trying to be proactive, not reactive. That's what trading psychology is. Because once you're on tilt, once you've lost your head, once you're trading with that out-of-body experience, there's nothing I can say, there's nothing that you can do, right? There's nothing that can happen outside of your world besides like your house burning down that's going to get you out of that out-of-body experience, right? There's no like magic word to get you out of that state of hypnosis. So it's all about being proactive, not reactive, and making it easy for yourself to behave the way that you would expect. So if you know that you get greedy hunting for a big number, right, a big P&L, and you got to hold on to every trade until you feel satisfied with the number, let me tell you, you're never going to feel satisfied with that number, right? You're always going to feel like you can get more, that you can make more, right? That the market's going to give you more because it's an irrational thought. It's not based on any logic. It's based on emotion and greed. So how do you combat that, right? You combat that by defining how you'd expect price action to behave if it was strong, right? You turn that greedy emotion into something binary that either happens or it doesn't. So for me, right, the thought is, okay, if price action, if after my entry price, I get a breakout away from my entry and I'm green, I probably shouldn't see a deep pullback under my entry price if the trade is strong, right? It wouldn't behave that way if it was moving in the way that I would have expected. So if I then see that reaction, now I've defined to myself, hey, it's strong when it makes a higher high and holds a higher high, and it's weak when it pulls back and tests and then can't really separate back up above. Now I know what my decision needs to be, right? I've planned out what that outcome is before I've ever seen it occur. And then I'm just sitting there watching, okay, is it giving me strong characteristics or is it giving me weak characteristics? Weak characteristics, muscle memory close. Strong characteristics, muscle memory pyramid, right? Effectively, that's the decision. So it's about being as deliberate or as specific you can be while you remain objective, right? Before you click submit. And then once you click submit, right, to go back, hey, is this following my trading plan? Is this behaving the way that I expect? Has this given me the reaction that I planned for? If yes, cool, keep holding. Look to build up your position if you can go risk-free. If no, look to close as your P&L is increasing, or get out if your trade is red. Those are your two choices. And you just train yourself to think that way, right? You create that muscle memory. You create that to be your default reaction. And now, okay, you're taking $100 losses, you're taking smaller wins, but when trades actually behave the way that you'd expect, instead of panicking on pullbacks or being worried about a number going away, you can trust that the plan's going to come together and you're going to get maximum follow through, right? And when you're trading with that defined structure, Stephen, right, what's going to happen here is that you're not going to feel as if you gave up that control and that you need to immediately make it back, because you know you're one good decision away from being nicely green on the trade. That gambler's mentality, right, or that gotta make it back mentality doesn't occur when you lose money in a controlled way by following your rules, by following your edge. It's when you lose money when you did something you know you shouldn't have done, right? So that could be as simple as, I felt like I should have closed this trade at 22,000. Now it's at 2287, and I felt like I should have closed it $200 ago. I didn't. Now let me take that trade to get back to where that feeling was, right? Or it's, I was up $1,000. I finished up the trade up $500 because I didn't take that action when I could have made the pain less. And then I've experienced the pain. I just want to get back to that, what I saw, right? Or how I felt with before that pain occurred, right? So it goes back to that proactive, not reactive. Reactive creates irrational decisions. Proactive keeps you rational and keeps making you money. Right? So we have to understand that when we're in control, or we do something repeatable, we can make that muscle memory and we can improve from that. When we do something based on an emotional reaction, then that decision, right, is irrational. There is no positive pattern associated with it. And we can't neatly basically either remember why we did something, right, or replicate that feeling based on a technical decision. So you can't solve an irrational emotional problem by asking yourself, what did I do better technically? You solve it by fixing why X made you feel this, right? And you solve for those feelings by being deliberate in what you're trying to do, so that you can understand your whys, right, behind your feeling, right? I love saying, I am the one who knocks, right? That's I love that from Breaking Bad. And it's just a constant reminder, right, that when I'm the one who's in control, when I'm the one who's making that decision, then things go better, right? I am the alpha of my mindset, right? When I give up that control and I take a passive approach in how I manage my psychology and follow my rules, then I am giving access or giving authority for my irrational brain, my emotional brain, my reactive brain to take into my control. But then it's also, right, using positive language to determine, right, why we feel that way or why we need to behave that way. So if you call yourself an asshole, you call yourself a liar, you call yourself all these things in your negative self-talk, all you're doing, right, is you're softening the blow for when you make that mistake again, right? Oh, I already know I am this, so it's okay if I continue to do this. Oh, I know that I am undisciplined, so it's okay if I make a undisciplined decision later on because I've already told myself that that's what I am. So you got to set yourself up for success, right? You got to use positive language to solve your problems. You got to be deliberate about the self-talk that you use and to track that, right? Like, I think one of the best things about running the stream the way that I do is that I basically go stream of consciousness, right? When I'm talking, I don't really have much of a filter when I'm on here. So I hear basically all of my thoughts, right? And I hear how ridiculous some of them are, which is like why I laugh at myself sometimes. And it's something that I have to control, right, to be able to be an effective trader. Oh, the days where I tell myself that I'm an idiot, that I keep getting faked out, that I do this, that I do that, that I use like excuses to describe my problem instead of thinking about how I can fix it, is the days I drain my mental capital, right? Those are the days where I have my worst P&L. Those are the days where I get tunnel vision and want to trade 600 times just to hope to God I get lucky. But the days where I'm deliberate, where I'm specific, where I'm defining exactly how price action wants to behave, then I'm just going through a checklist, right? I'm being, like you see those like factory workers on TikTok that are just like throwing rubber ducks all day down the conveyor belt. Just feels like that, right? Where you're just ticking off compliance things and just doing your job. So that's the point, right? The point is from going and trading for a thrill to going to trading for a living, right? Or trading for an income. And it's not to say that winning doesn't feel good. It feels great. But when we chase that feeling, then we just go, again, right? We empower our emotional mind instead of our logical one. And we have to be more deliberate in our behaviors to default, right? To treat ourselves, to force ourselves to default into being the deliberate trader, not the desperate trader. Today, right? 3 for 4 on the day. Awesome. I don't need to do anything else here. And it's been a strong week. Been a strong week. No complaints. I left some money on the table here today for sure. Is it the end of the world? No. And yeah, have we really missed on anything here today, objectively? Right, probably not. Right, the one trade that would have been a big win would have shaken us out first before making that big move, right? So it would have been this one here, where you would have had your stop loss at 89, stop loss went to 87, it would have been faked out before it went higher. It's really the only thing, right, where I could maybe trick myself into thinking, ooh, I would have made more money here today. Then the other elements, right, are just stuff I can't control. So a couple trades, right, where I was up $1,000 and I take small wins, or up $800 and don't finish up $800. Just leaving money on the table. So, okay, that's something that I can focus on, right? That's something that I have control over, and I can study why I made that decision. But instead of thinking, oh my gosh, I'm owed an extra $100, extra $1,000, extra $10,000 here today, not owed shit. I made the mistake, right? Market doesn't owe me anything. So for now, still just hanging out. I think one of the important things to realize as a trader, right, is that it's better to admit that you walked through the wrong door than it is to spend any more time in the wrong trade, right? So it's better to admit early. Like, it's never going to feel good to admit that you're wrong, but it feels the best the first or the soonest that you can do it, right? So the longer that you let it fester, the worse that it ends up feeling. And so I can be proactive, right, in obsessing over closing things as quick as I can versus doing anything contrary to that. So any questions here, team? Any questions about anything I've done? Any of the things I've ranted and raved about? Any of the concepts I've described that maybe might put me in the insane asylum? Anything maybe you want me to hit on that I haven't hit on this week? What do you mean by perpetual? Just like the rolling contract? So like generally, right, we're trading futures that are have an expiration date, right? So at the moment, we're trading the March contract. And we'll switch over to trading the June contract, right, middle of March. and then the other thing, and then the other thing. So what do you think setup and confirmation is? So perpetual would mean no expiration date, right? Within that context. So I trade contracts that have a defined expiration date where you got to switch over to the next contract. So right now, ES1 is ESH 2025, and it'll switch over to ESM 2025, right? 18th of March. So ES1, right, technically is a rolling contract. You could argue that it's perpetual. I would be careful of describing that. But specifically, right, ES1 is the same as ESH 2025 right now. And so I am trading ESH technically, but ES1 is the same thing. On the 18th, right, or around the 18th, my chart will likely say ESH 2025, as there'll be a rollover between ESM and ESH, and there'll be a difference in price. So Norm, what do you think is the setup, or how would you define setup and confirmation historically? Just daily time frame, and if you set up your events that you see. So I just have it set up continuous contract switch, and then it should show me these arrows. You can also find all that information by just Googling ES contract roll dates. NQ contract roll dates happens once a quarter. And so what's confirmation, Norm? So confirmation occurs on a full body candle, right, with increasing outlier volume. And then once you get separations away from the range, each new setup occurs when you get a breakout and hold of low of day or high of day on increasing outlier volume. With a stop loss then, right, high or low of your confirmation candle, targeting either the red line or our secondary levels. So then each new setup, right, either becomes as a breakout, as a high vol breakout above the high of day on increasing outlier volume, or alternatively, right, the other setup, if the market conditions are appropriate, occurs on a fake out above high of day, which occurs on either increasing outlier volume, right, low vol fake out, or like that double fake out scenario we've been talking about. There should be plenty of chapters, right, inside the course that explain confirmation in detail. So now, right, the next setup that we'd be looking for would be either a breakout and hold under that 978, right, on increasing outlier volume and a strong candle, or, right, we possibly set up for a fake out scenario if we can't hold that lower low. And confirmation is always the same, right? It's a strong candle with strong volume. So, okay, we held under low of day on increasing outlier volume, right, and a strong candle shape. So now, right, we have a setup here to the downside. So now we're asking ourselves, okay, how would I expect price action to behave if it's strong trending PA? Well, now that it's made a lower low, right, we should see that previous area of resistance act as support for a continuation move to the downside. A breakout back up above that 981 after a fake out lower doesn't really give me any conviction that I've got strong bearish momentum, right, and would invalidate my confirmation signal. So again, right, we're looking for that yellow line to act as support for a downside move. Until it does, I don't really have a reason to trade, right? I know that my stop loss needs to be 81.50. I'll just round that up to 82. Like I said, I'm dumb. I don't like doing math. And then so I'm just watching what the reaction is around this price, right? Around this yellow line. If it's strong, we should see it move slowly into it, get stuffed, and break down. If it's weak, right, we should see it do exactly this. Make a lower low, and then pretty much immediately climb back up over. It's okay. Maybe it wants to shake out participants. Maybe it wants to do this. Maybe it wants to do that. So now, right, kind of looks like a fake out post breakout, right? So bearish thesis has failed. So no setup here, right, any longer on this time frame. Should possibly be looking for a breakout trade, right? Or maybe, right, on a longer time frame here, you'd expect things to break down. But then we can look at this from a similar perspective, right? If it's a break and hold here under our confirmation candle of a low, right, of 977. So we want to see it break down and hold under 977 to have an active setup trigger that we could get confirmation for. It then pulling back from 977 to 994 in 20 seconds probably doesn't tell me that that's acting as support for a downside continuation narrative. So instead of chasing for this pullback entry, I know that, hey, this first point of resistance didn't get stuffed. So if that first point of resistance isn't getting stuffed, I probably shouldn't assume that the high of my confirmation candle is also going to behave as if it's strong resistance, because I have no evidence that bulls are going to defend that area. So I would very much expect that 2201 now, right, especially because we pulled back so close to it, to not be respected. And so if I was still confident in this entry thesis, it'd probably be a fake out trade, but I'm not confident that this thesis is going to hold. So I wouldn't be looking for that anymore. So I'm just filtering through, right? Where would have I expected bulls to defend or bears to defend? Did they defend there at the first possible opportunity? No. There we go. See, doesn't hold, right? Fake out above. So a really easy decision to have not lost any money, because price action isn't behaving how I'd expect it to behave if it was strong. So I'm just making it binary, right? I could sit here just like looking at my cup of coffee. Why is it so empty, right? And rant and explain my price action without ever feeling as if I was even borderline close to placing a trade. So I would go through the start here channel in my Discord. That would be the starting point. That for me, I think, is 90% of the technical stuff you need. And then the rest is screen time and obsessing over details. Any questions here, team? Any questions? No, I'm not. I'm Canadian. I grew up in Vancouver. So the long, you mean, Antonin? So it's just that fake out thesis that we've been talking about here. So price action really choppy, right? No real strong indication of like a change in momentum. So once you see failed breakouts, the pattern I've kind of found this week is that on fake out 2, it tends to reverse and give you a little bit of a bounce. So once you see price action failed, right? Fake out 1, fake out 2, and you look to buy in on a reclaim back up above stop loss of fake out 1, and then look to see if you can get like a mean reversion trade. I posted a video in the Discord that basically explains that pattern. If you go back the 21st, you can see 15-minute explanation of what that is. Any other questions here, team? Any other questions? Any other questions, team? Any other questions? I've never heard of them. I thought I haven't heard of them. No stream on Monday, Kiki. No stream on Monday. I'm gonna have no voice and travel plans. Enjoy. Oh yeah, Jeff, it's gonna be a great weekend. Go Birds. I'm scared. All right, team. Awesome day here. 3 for 4. Great finish to the week. These yellows, I just drew them out to show, just to illustrate a point. So, just to show fake out prices, what we wanted to hold under, and what we wanted to see price action find support. So, setup trigger would have occurred on a breakdown here under this first yellow line. And then on confirmation here, you'd want it to see the either bounce off of yellow line 1 or yellow line 2. It did neither. All right, guys. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always. Right? If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. But have yourselves a great weekend, and I will see you all on Tuesday. We'll be back at it then. You're going to hear my voice probably being gone, but should still be a good time. So I'll see you guys soon, and we'll talk later. Peace.